Alright, I was actually not planning to say this early, but I might sell some or even all of my properties in Dubai this year. I know how that sounds. Dubai has been the hotspot for investors, prices have been flying, people are buying like crazy, and developers are offering payment plans like they are giving away candy. But honestly, I'm starting to see signs that not many people are talking about. There are cracks forming, subtle, but they are there. And this is not just me being dramatic or trying to scare anyone. Even Fitch ratings, they are not exactly the clickbait type, they just put out a report saying that property prices could fall. So in this video, I'm just going to lay it all out. The data, the shift I'm seeing on the ground, and the exact red flag that made me pause and say, wait a minute, something's off here. Whether you are thinking about buying in Dubai or you are already holding a couple of properties, watch this before you make your next move. What we have seen in Dubai over the last few years isn't your usual kind of real estate boom. The crazy demand spike, it might not have been truly organic. Think about it, since 2020 we've had the pandemic, we've had the Russia and Ukraine war, the inflation spikes, and ongoing regional tensions. And every time one of those shocks hit, people with money started looking for a safe, politically neutral place to park their money. And Dubai checked all the boxes. Russians turned to Dubai after the sanctions hit, and where the Europeans came in attracted by the no income tax policy. And during COVID, when most of the world was locked down, Dubai stayed open, safe, and welcoming investment with both hands. That surge in demand, it was driven by fear and urgency, not by natural long-term growth in things like jobs, wages, or actual end users' housing needs. That is what we call reactionary growth. And while it's great in the short term, it's not always built to last. Compare that to organic growth, where the market expands steadily because more people are moving in for work, income levels are rising, and actual residents need a place to live. When those crises start to ease, two things are likely to happen in my opinion. The first will be that fewer investors will come in. The second thing is that the investors who bought early in 2020 or 2021 might now be looking to cash out, take their profit, and reinvest only at a later stage after a correction or simply invest their money somewhere else. But the supply, it doesn't disappear. Those thousands of units that were built to serve a high pressure moment in time, they are still coming. And they might be hitting the market at a time when the demand is not big enough to absorb it. If that is the case, we might expect a short-term correction. Don't get me wrong, I do believe in Dubai's long-term future. The Dubai 2040 plan aims to double the population, and that's a serious vision. But 2040 is in 15 years. In the short term, we could be facing a situation where supply outpaces the demand. To conclude, I believe that part of the momentum that pushed the prices up in Dubai over the past few years was built by the pandemic and by the war in Ukraine. But this also introduced some imbalance between the supply and the demand. And that leads perfectly into the next point, the hidden leverage risk in the market. Let's talk about that. Now, here's something that many people don't realize. The way many Dubai properties are bought right now is not through traditional mortgages, it's through developer payment plans. That sounds super attractive on the surface, but they come with a risk. Let me break it down for you. A lot of developers in Dubai offer what we call post-handover payment plans. That means that instead of paying the full price upfront or through a bank loan, buyers pay a small amount at the booking and during the construction. And then a big chunk of the total price is due when the building is finished and handed over. Here is where it gets risky. In 2025 and 2026 alone, tens of thousands of new homes will be completed and delivered. That means that a lot of investors who bought off-plan will now be asked to pay the final 40 or 60% of their property prices. But here's the thing, many of them never planned to actually pay that amount. Their goal from day one was to sell the property before the handover and hopefully walk away with a nice profit. The problem is, they might all try to sell at the same time. And when thousands of people rush to sell similar properties in the same area, guess what happens? Prices start to drop. That is basic supply and demand. More listings, fewer buyers, lower prices. Some sellers will be forced to sell below the market price just to avoid paying a huge handover amount to the developer. Now look, I'm not saying that every buyer is in trouble, but if enough investors are caught off guard and forced to sell under pressure, this could cause a ripple effect across the market. So if you are thinking of buying off-plan or you already have, it is super important to think about what happens at the end of the payment plan. Can you afford the handover, or are you hoping to sell before it comes? Alright, so we've talked about all the warning signs: oversupply, risky payment plans, and investors trying to exit. But here's the thing, the truth is no one really knows exactly what is going to happen. On one hand, analysts like Fitch Ratings are already forecasting a potential price correction, possibly up to 10–15% by the end of 2025 or 2026. Why? Because prices have increased already very rapidly in the last 4 years, and because the very large supplies coming in this year and next might outpace the short-term demand. That could put pressure on prices, especially in areas with a lot of similar units hitting the market at once. But, and it's a big but, there is another side of the story. A lot of experts and local developers believe that Dubai's rapid population growth could actually absorb much of the new supply. The government's 2040 master plan aims to double the population, and we've already seen strong migration into the city from across the world. The demand for housing isn't just from investors, it's coming from actual end users as well. People moving here to live, work and raise their family. So what we might be looking at may not be a crash, but more like a rebalancing. Some part of the market may cool off, especially the over-leveraged or oversupplied segments, but prime areas and well-managed projects, they might hold strong or even keep rising. If you're thinking long-term, the fundamentals behind Dubai, the economic growth, the population expansion, the investor-friendly policies are still very much in play. Alright, now let's talk about strategy, because depending on where you stand as an investor, what you should do right now in the Dubai property market could look very different. There are really three kinds of investors watching this. So the new buyers, the current owners, and the opportunists waiting on the sidelines. So here is what I think each of you should be thinking about right now. One, if you are a new buyer, this is not the time to rush in. Yes, the market still looks hot on the surface, but there is a big wave of new supply coming and prices are already starting to cool down in some areas. You want to be patient and be ready to negotiate. In the near future, developers might be under pressure to sell their inventory. If the demand softens even a little, you might get a better deal in the next 6 to 12 months. 2. If you already own a property, this is the time to play defense. You have likely seen strong appreciation over the past few years, so now check your leverage. If you finance the property, try to reduce your debt exposure. If your off-plan handover is coming up in 2025 or 2026, make sure that you are ready for that balloon payment. If not, start thinking, do I exit now while the market is still near its peak? Or do I hold long term and ride out for possible turbulence? Example, if you bought in 2021 at 1 million and it's now worth 1.8 million, that's a solid gain. Maybe this is a good time to de-risk, take profit and reallocate to lower risk assets. If you are an opportunist, the next 12 to 18 months might bring the moment you've been waiting for. As more properties hit the market and investors face handover payments they can't cover, we could see a wave of distressed sales, especially in overbuilt communities. This could be a chance to scoop up underpriced assets. One tip, look for units in buildings nearing handovers where off-plan buyers are trying to sell before that final payment plan. That's where the discounts could show up. Bottom line, don't just follow the hype. Understand where you are in the cycle and more importantly, where you are in your personal investment journey. Everyone's playbook is different. Alright, that's it for me for today. Whether you already own a property or you are watching from the sideline, I hope that this helped clear things up, or at least gave you something to think about. If you found this video useful, hit that like button, it really helps to push the video out to more people. I would also love to know what you are doing right now. Are you buying, selling, or are you just holding back and watching the market? Drop a comment below. I'm in there reading and replying to all messages. And if you're into real estate content that actually cuts through the noise, make sure to subscribe. I've got a lot more coming. Thank you for watching and I'll see you in the next video. That's the kind of growth that creates a stable real estate foundation.